I think we should give that one a serious jingle.
Let's do it.
Should we do this
a little jingle
or this?
Jingle.
Cheers. The new one?
Yeah, let's go a new one.
You want to go new? Okay, we're going new. We're going new, guys. Ladies and gentlemen, this is Addie Net and
yours truly, Casey Carpenter.
Oh, I can't even hear you, dude. Where you at?
Oh, man.
Talk to me.
Load me up. Load me
up.
up.
Oh, my gosh. We got to fix that. Hold on, ladies and gentlemen.
This is why it's live. This is why it's live. But again,
there you are.
Yours truly, Casey Carpenter.
I got you. I got Casey in now. All right. He's chimed in. Give me one more tester.
Yours truly.
All right. We got Casey. We got Addie. It's just the duo today, guys. MLO chiming in on a Friday. I hope everyone had an amazing week. We're putting together this new little beat, little starter.
We're feeling it out. I mean, give us your likes, comments, questions, concerns.
All those DJs are just blowing up too on the live streams. Have you seen that?
Maybe I should start coming on with a mask and stuff. We can open up a little DJ session.
So what are we talking about today, Casey?
So we're talking about kind of this whole new, maybe norm, maybe not norm we're dealing with, obviously the COVID situation, but with real estate, people that are relocating, moving. So moving during COVID and what kind of that entails. Obviously, we have one of the top relocation loan advisors in the Portland area sitting next to me, Addie Net. So I'm going to dive deep with some questions on his brain to pick it and see what we have for relocation.
Yeah, no, I think it's a really big topic, Case, because right now it's been an interesting year. So I think it's important to know people are moving. I've seen people come from Florida, New York, Texas, Wisconsin, always the Bay Area, and Seattle. So I think it's important we dive into what people are looking for on relocating, because there's also people leaving here, to be quite honest. I mean, there's people exiting our state, Portland, Oregon, city and state. Let's unpack that. What's another word for unpack? I feel like that's so overused.
Unravel.
That's pretty good.
I don't know.
Unravel.
I'm a finance guy. I'm not a English guy.
Another overused podcasting term, dive deep. Deep dive. You ready to do a deep dive? Unpack kind of works with the play on moving.
Yeah, it does. And Addie, you make a good point there. Not only moving into a state, but also moving out of a state. I think we got good conversations, topics to talk about and dive into. You
used it.
I knew it was coming.
I think we should challenge each other to see if we can not use dive. I'm trying to get my settings all set up here. All right, we're good. I think opening up, man. I'll let you lead me with a question, essentially.
Well, yeah, let's
because I just talk forever.
Let's just start from the top too.
Mm-hmm.
Thanks for letting me take the lead. So you're thinking about it. You're thinking about either moving out of your state and into another state. What kind of is the basis you want to start with? I mean, do you want to just talk to any loan officer out there?
Mm-hmm.
This is kind of a different deal than just your average purchase within your city limits or however you're doing it normal. You're coming into a different state. They have different either lending laws or different real estate laws that you want to be aware of. So let's just start from the basics. How important of it for a consumer, Addie, is it for them to find the right person that knows how to deal with relocating for real estate?
Yeah, and I think the obvious thing is everyone wants someone who's well versed in it. Some of the biggest questions that I get is you get a lot of different scenarios. One being a work forced move. So there's already a timestamp on the situation, right? So a company might be oh, hey, we're going to move you to Portland, Oregon or Vancouver, Washington. Your start date is August 1st or September 1st. So it does help when there is that date that we're working with. But in a lot of manners, there's in situations, people we're thinking, because we were talking to individuals in 2019 that were planning on coming here in 2020. Some of them did make the move and some of them actually had postponed it. So it first starts with the job situation. But the biggest question I get for ones that are moving for a job, say they want to get a new one, is how do I work through proper steps to be prepared on the financing side, right? So the number one key thing people want to know is you do need to have your employer working with you on either the relocation approval or at least approval for remote work, which is happening all the time. Like ever since the pandemic now, you're getting tons of people in the Bay Area, huge tech industry. They're now getting approved remote work. And financially, they're looking at a place, hey, maybe they like Portland a lot better, or maybe they could get a lot more house and reduce their overhead and their income stays the same. So you're seeing a lot of newly approved remote work.
Got it. And that makes sense too, because you're also, and I'm hearing conversations of people, moving out of the state or something for maybe tax purposes or something like that. So you're seeing, moving into states, moving out of states for job relocations or maybe financial, reasons. So it's happening. And as a lot of people don't think, with COVID, these transactions are still occurring. So it's something to definitely be educated about and well adversed about, and especially if you're thinking about moving. So kind of falling back into that, Addie, for that home buyer, that consumer, typically they be probably needing to sell their home, correct? I mean, they either have their home there that they're living at and they're going to sell and use those proceeds to purchase, or maybe a range of things. But for a client maybe in that situation, could you kind of...
Yeah, no, that's a really good point, Casey, because I see it both ways. Some are ready to buy now. They're not what's referred to as contingent. But when they are, it does add another layer dynamic to the complexity of the entire situation. So to everyone out there listening, like a departing residence is the house that they're selling in their current state and city, and then they'll be purchasing the new home. However, they need all of the equity from the sale to purchase. So we're always looking right away, hey, are we financially forced to be contingent? Because some people have enough income to qualify and they don't need to sell, which is a huge advantage, not only from an offer standpoint, but a logistical standpoint. However, very, very rare. When people are departing a residence and putting it on the market, it is extremely important to have everyone, the lender, the agents, the title on both ends, all working together. Preferably they have a history and a relationship. I have an incredible opportunity to work with, Jesse Dow and Jackson Wilkie, who founded the Living in Portland YouTube channel, and a couple of their buyer's agents like Heather Listy, Jessica George, Juliana Parrish, great relocation specialists locally here. And I know when I'm boarded with that team, we all have one common goal, and that's to make it as the least amount of stress as possible. Because moving across the country, Casey, can you imagine? Like,
I mean, let's be honest.
Packing up your whole family,
guys. We're packing up the family. We've got to figure out that situation too. Getting the load, the moving trucks, and they're moving across. We're trying to time everything out. If you're trying to time the closing of that home, maybe with the closing of your home that you're selling. I mean, there's a lot of moving parts. That's why it is so important. And I keep reiterating, Addie being a top relocation loan officer here in the Portland area, it's important, as we always say, to get with people that have those expertise and are specialists in what you're doing, especially on a relocation.
Yeah, I mean,
or as I say, for my veterans out there, obviously for me, being a VA specialist and a veteran myself, you want to get with those people that know the program.
Yeah, that's a great point. And the product's not specific. I'm seeing a lot of VA moves, yeah. So I'm sure you've imagined that with relocating, and there are some challenges with that regarding if you used your VA certificate of eligibility on the departing residence, and then also reinstating that for the purchase. So you do want someone who is versed in these situations. So going first to the agent, one thing that I love about our team with the Relo is, it takes a unique type of person and a dedication to service to display these homes remotely. So I'm seeing a lot of use from, like, Heather uses FaceTime. So she'll go fully ready and tour the home on her phone if they're not able to be there. In some instances, the families are coming out for a trip, and the trips are usually utilized for getting to know areas and sometimes the right and perfect home will come up. But usually that visit is utilized to get, familiar with the town, the different quadrants, the schools. Everyone's got their own set of standards. But then there's a huge amount of trust with the agent, with like, hey, this person needs to be completely honest with me, because they're going to offer remotely. They're going to offer from across the country. In a lot of situations, they haven't even walked the home yet. From a lending standpoint, this is what I want to clearly break down. Like, you really should have proper communication with the lender and the title companies, getting ahead of it in terms of approved remote work, as I mentioned earlier, or a start date, which there's a lot of details. And I encourage everyone to like reach out to us. Like, if you're wanting to come to the Pacific Northwest, this is primarily what I focus on, is relocation. And there's just, you always learn something new. But you can never underestimate the value of communicating and having everyone on the same side. So
yeah, and that communication part, Addie, especially up front, if you're planning, if you're in the early stages of this, because maybe it's not a work relocation where it might be, within the same company and it's kind of set in place for you. Maybe you're going for it, so you're moving out, you're leaving the job behind, hoping to find a new job there. I mean, that's another important piece to early on, obviously talk about and set in place. Did you get that offer letter already? Do you have a start date? Do we have, income or financial details on that we can use, for qualifying or helping you? That stuff's very important, and that all starts at the very beginning, talking with, your local advisor like Addison, who knows the relocation, and trying to help you set those proper steps in place. And now that is one step, right, guys? And then we got the whole other part, like we talked about, moving expenses. I mean, everything to consider that are going to be on top or outside of what you'd normally probably be budgeting for on a normal purchase. So
yeah, and I mean, going back to that offer thing, Casey, it's really important because, first of all, if you don't have an agent who has a great reputation handling relocation, the sellers are going to look at the offer a little bit skewed versus, oh my gosh, I know this agent because that's all he or she focuses on. And it's the same for lending. So you want local people who know what they're doing with relocation, because it's a strong approach to have your team reaching out to the sellers. And that's what we do. So the fact that, for me as the lender, can call the listing agent and be like, hey, I've done A through Z. I'm already impressing them with all of that. This is their start date. This is this, say everything that I can say compliantly. Right. It's a huge deal, because if there's no one voicing and, what am I trying to say? If there's no one being an advocate for your family here locally, like, the offer is just on paper. They don't know the story.
Right, guys, you're not here. Remember, you're not here. You're still in your own state. I mean, for the most part.
Yeah.
And it's just a piece of paper, and it's the people submitting that offer going to bat for you to get that offer accepted over the next person. So, of course, you want to make sure that's in the right hands.
Yeah, it makes a big difference. Other questions I get all the time is like, how early should I plan it? This and that. What are the timelines? And I've seen it all across the board. Like I'd mentioned earlier, some people want to start talking to the team a year early, 2 years. Sometimes it's 3 months, 6 months. Sometimes people give us a ring when they're actually in town now and we didn't even know. So I think it's really important to at least have that initial conversation and to go through the pre-qualification, pre-approval process, because that's a lot on the line. And especially this year with guidelines shifting and swinging, and the pandemic, and how underwriters have become a little more conservative, in my opinion, we want to iron out those details and be bulletproof and not be running the old flea flicker, no huddle offense.
You definitely do not want the flea flicker, no huddle offense.
Yeah.
Or the jet sweep going on. You want to make sure
the jets.
you want to make sure that those pieces are in place, because guys, imagine you're moving across the country, your home is in contract being sold, you're in contract on the other one, and you're having issues then on your financing, and maybe it might not go through. That's a big, it's a big issue. And so you want to make sure up front, when you're having all those thoughts, put that in place, talk to your advisor, so you're having all those stuff all that stuff detailed out, and basically, it's a solid review of your situation, and you have your job in place, you have all that stuff ahead of time, or at least have thought about it, discussed it, so you guys have that plan.
Yeah, I'd say one of the biggest two factors is the closing date, and not to like, I'm trying not to sound like, I don't know what the right word is, but essentially closing dates play a huge factor, because right now our industry isn't closing as organized as I would like to see it. It's just a lot harder with remote workers. You have a lot of different variables with like servers and cutoff times, the county recording, funding, wiring. So when you're moving, the biggest thing I can say is do not schedule your closing to be the same day you plan to arrive and you must be in there. It is really, really hard to make that happen. And yeah, we've done it. It's been great, but things of all other variables, like the departing residents close late, or that title company or funder on the sell that didn't hit the wire cutoff, so and they couldn't close. Sellers aren't going to let people into their home prior to closing. So I always advise having a little bit of a buffer from arriving to your new place and when you're expecting to be able to have access to the property. And most people are just getting into like an Airbnb for a few days.
Yeah, and that's huge. And I'm sure as you're having that conversation up front with the clients, you're letting them know to expect that, because that is I guarantee most clients out there, and as consumers probably watching, I would expect that that's my close date. I guess that's the date I'm moving into the house.
And it's just not worth the risk. Like totally. And yeah, it's fine to set it up, but don't have the movers and the pressure washer and the contractors out there building the fence, and you're going to sell, driver fly across the country, close on the buy, move. It's just a lot of variables right now in this current state.
And a lot of hands involved, and I think people do lose track of that. I mean, just in that,
how many different players are in the game?
How many different players are in the game to help a loan close? I mean, you have front end, back end people, but also think about it just transactional wise. You're purchasing a house. That's one transaction with real estate agents on both sides, and your loan officers helping you there. Your house you are selling, so you might have maybe the same real estate agent, probably not if it's relocation. So you've got other agents and other lenders on that transaction. And let's just say that person buying your house actually was selling their house too.
Right.
And now we have 3 transactions going on, all stacking, up to hopefully all closed and then make yours close. So that's a lot to be involved in, but that's why you have us and seasoned professionals doing that for you. But it's a lot of stuff, so you want to be, I think, like Addison's point, just be a little loose with some of that stuff. Like expect it.
Just give yourself a buffer. It doesn't hurt. Give yourself a buffer. And our boy Roland Cochran chimed in here. Have you seen more flexibility?
Roland, that is awesome.
Yeah, Roland, our home slice, who is on our channel. What was that, Wednesday?
Yeah, I think
just a couple of days ago. Yeah. Have you seen more flexibility since COVID? Do you think he's referring to the guidelines?
Yeah, I think maybe, probably guidelines, or at least we can start there. And we are starting to see products and stuff come back that maybe were taken off the shelf for COVID, and that'd be maybe just a little bit more riskier products, maybe some of the jumbo lending, arm lending, stuff like that. We are starting to see come back. We're starting to see self-employment guidelines loosen up, which helps a lot, because during COVID, lenders just started to crack down on some stuff. So
yeah, I would agree with you. Like, we're seeing the jumbo market start opening up again. So that's probably one of the biggest game changers you'll see right there is that will slowly, investors will become more prone to getting after that business. So all you out there who don't know what a jumbo, any loan that exceeds the 510 400 conventional cap becomes a jumbo loan. So during the pandemic, and I just whacked my mic, sorry.
We're live.
I'm a hand talker.
Very animated.
Yeah. That's reopening. So we're seeing a reduction in some minimum credit scores on the jumbo, which we were heavy there at like 740, 750 I was seeing at most banks. And now we just saw one published at a 680 minimum credit score. So that's a little bit of a loosening per the COVID. I think what's going to be really hard is how we transition back to people going to work. And I was trying to explain this earlier today on a different channel is we all got to kind of look at it from the underwriter's perspective, meaning like their job is to determine a couple of different things. Solidification of the job, as well as proper continuance of the income. So how do we do that? And I really think, right now, the way to demonstrate it that it's secure from talking to underwriters is, at least being back for a few payroll checks, meaning like 30 days typically, and then having a verification of employment that there's no plans to adjust that actual continuance. But I think we're going to see some really one-off situations or individual evaluations. Because you look at, say, what is a restaurant owner and a restaurant server and a bartender? Are they going to make the same amount of money in tips and hourly as they were a year ago?
No, it's a great point, Addie, because with that, it just kind of comes back to that ability to pay, and I think they really are looking at that and taking COVID into into their situations and their decisions, because different industries have been affected drastically. We've seen, especially service industry, especially restaurant industries. But the ability to pay is a big factor, because sometimes, what if you only had a couple of those, checks to show before we're closing? Well, it might require, a minimum of 6 months to show that, and it's just you're seeing some of the things in there that maybe we could try to make a case for prior to COVID, but that leniency is not there anymore, because COVID has created us to be a little bit more, not as risk as tolerant as we used to be.
But. Yeah, I hear what you're saying, and I guess I would advise anyone, because there's a lot of people who just go online and apply for a mortgage or a loan or whatever as a pre-qualification. I would say, if you were trying to do something on your own, really put in almost every account in investment, like get your IRA, your 401k, any savings account, because my prediction is we're going into a world of reserves, meaning a lot of compensating factors to, well, does this person have a stable job? Will be backed with, well, if they have 6 months of reserves, we're okay with this.
Yep.
So it just seems like this is the year of like savings makes all the difference. And one of the bigger changes over the last few years is mortgage insurance. And I was learning, I didn't know this until our podcast with Courtney Hall at Essent Mortgage. She was talking about how mortgage insurance is dynamically priced, and meaning like how much do you have to pay, right? And there's additional factors to reserves. So you can get a lower premium for that security, because they're insuring you on the mortgage, they're insuring the lender. But I just think that the best thing you can do is, demonstrate some reserves, so you're coming into underwriting with some savings.
Yeah, that's huge. You have your savings in there. I mean, you're only going to be able to do as best as you can, but it's making sure you show that proof of income. You got those, savings in there, because all you're trying to do is build your best financial profile for yourself to help, get it approved.
Yeah, definitely. And I just want to reiterate as we land the plane here, Ron, thanks for chiming in on the comment. But if you're looking to relocate here, even refinance, whatever your plans are, we've got your back. As I like to say, I'm living in Portland.
Yeah, we've got your back.
Yeah.
Here at MLO.
Yeah.
MLO.
Get it through, smooth it out.
We got your back. But relocation, I want to hit it on the head as we're trailing off. Addie, being the top advisor for that, you want to go with people that know that, can help you through that. There's a lot of moving parts. Addie, thanks for the advice.
Yeah, I think it's a good rundown, and definitely it'll be a part two, I think, too. Looking forward to trying to get some of these great, amazing agents over at the Living in Portland team. Jesse, Dow, Jackson, Wilkie, Heather Listy, Juliana Parrish, Jessica George, all these guys that really commit their lives they sacrifice a lot to assist with relocating during COVID. But if there's anything we can do as a team to help you, do not hesitate to reach out. I'd like to remind you, this is a live studio broadcast recording. Can I say that? Live studio broadcast recording. Boom.
Yes,
Sounds like a big deal. Sounds like a big deal. Check us out wherever you grab your podcast. Apple is one of our biggest ones, Spotify backing that, but we're on all the platforms.
iHeartRadio.
And a lot of first-time home buyers too. Like if you know of someone buying a home, share the podcast, share that channel. It's really easy. And I've gotten a lot of super huge feedback.
Absolutely. We're sending it out to people that are, maybe going through processes thinking about it, and they're using it for education.
Yeah. Casey, thanks for taking the time to make it happen.
Thanks, guys.
Once again, this is Addie Nett and Casey Carpenter with MLO.